Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Thanks much for inviting me on, Jim. Always a pleasure.
Rick, as if we didn't have enough challenges from a virus and a downturn in the economy, they're now worried about these giant Asian hornets, 2 inches big. I don't know what that would be, about 50 centimeters or millimeters, 50 millimeters. God, if it was centimeters, they'd be the size of a small truck. But anyway, it's not the fact that they have a very, very bad sting, but they could wipe out our honeybees, which are already hard pressed because of the pesticides that are being sprayed around willy-nilly. What kind of a hit is this going to be for our agri business, which is again suffering too because they can't get migrant workers?
Well, I have to say, living down here in South Florida, I've got to laugh because we've got critters that I've become used to seeing around my home and inside my home that could eat these murder hornets the way people eat blueberries on their cereal for breakfast. But looking at the beekeepers in the Northwest, they're really challenged. It's not like the honeybee didn't have big enough problems of its own that at some point almost looked like an extinction. So I hope that the Seattle Post-Intelligencer and the Portland papers don't get in the way of the beekeepers and get on them for the racist destruction of the genocide against these Asian pests. But they are a pest, and apparently the only natural defense the bees have is to generate enough warmth in the hive to kill them.
Wow. So here in the Pacific Northwest, warmth sometimes is hard to come by.
Well, you've never been inside a hive, I take it.
Yes, everybody, when you see people covered in bees, they remark about how hot it is inside of, 5,000 bees. They generate a lot of heat.
Heck of a way to keep warm, but you can imagine, they do generate some heat.
Well, if you want social distancing, just cover yourself in bees.
It's true. Whenever I've been covered in bees, I've never really had a problem with people just getting in my face.
Now, getting down to, I know, we're laughing about killer bees, and I never thought we would. But they're hornets. Please don't confuse the hornets with the bees. The bees are our friends. They make honey. The hornets eat the honeybees.
Right.
New York real estate. Of course, what kind of condition is it in right now?
Well, not a good way. I think I read that the revenues alone from business generated in New York are on the order. The losses are on the order of $13 billion, which is a big chunk of change for a city that spends like a drunken sailor. So another looming problem for New York is that so many people who've been working from their homes have discovered that it's possible to do that, and not only do they not have to go into the city as often to do business, but they've also gotten used to working from their homes in sweats. So I think that's a big problem for New York long term.
Perhaps Lululemon will move ahead here, but yeah, your three-piece business suits, not so much.
Yeah, I can't imagine. Even George Zimmer can't sell a suit these days, and that's just another big retail space that's going to open up. I think men's suits are definitely dead.
What's going to happen to all those giant business towers in all of our downtowns across North America?
They'll all close. And again, you can sort of see it from your own perspective. I think each of us in our own lives can know where we buy stuff and how eager we are to buy stuff. But you've got some very big players that have been just struggling to stay alive. Nordstrom's is one. They do everything right, and yet they can't survive. And I'm afraid they won't. It's possible that some of the sporting goods chains like Dick's will manage to reopen. But when you think of all the bigger stores at the malls, they're all going to close, and it's going to accelerate a process that has been going on where the REITs have essentially kept the mall real estate afloat simply by converting the space. They take the big stores and they convert it to multi-use offices, residential, smaller stores. But they got more than they can convert now, and the pandemic has just kind of accelerated the process beyond what they can cope with.
What about those companies that specialize in organizing office space for people? Will they survive?
On a smaller scale, yes. I think it was a good idea, and certainly the telemarketing or telecommuting, will get an additional push, a boost from whatever the residual effects are from the pandemic on how we do business. So I think they'll be all right, but certainly not on the scale that WeWork was once contemplating. And it's not going to be big players who are dominating that. It will happen organically at a smaller level where a lot of smaller venues eventually get leased out to businesses that can pay the rent. But I think even there, just when you look at the demographics, bigger picture, a lot of the smaller malls have as anchor tenants medical offices and things. And medical it's always going to be a growth industry because the government is involved in it, unfortunately. So that will be able to. That's a factor that will take up a lot of that real estate, but the commercial part of it, the retail part of it, is going to be a real problem.
When I was talking to a futurist, he said one savior for shopping malls perhaps could be to turn it into seniors housing because they would have medical help nearby. There's parking and, all the things that they need, little shops and so on within walking distance, which is great for people who are still mobile but need all that extra assistance. Is that the future of shopping malls? They'll actually become senior specialist centers and turning the maybe nearby office towers into residential towers for them.
Well, I think that's an interesting idea. Certainly, when you use the word seniors, that's a very, very big thing because we've got this aging baby boomer population, and to some extent, their retirement plans may have been altered by the pandemic. If the stock market takes another big leg down, it could further change the retirement plans, and it's so hard to know what's coming, let alone plan in a way that you can take on these huge capital intensive projects to somehow accommodate the elderly. So it's anybody's guess what will be practicable in terms of meeting the needs of an elderly population that requires special medical care.
We'll have more with Rick Ackerman right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, people seem to be heading back to the stock market in droves. Are they investing wisely right now?
I don't believe either of those things are true. I don't think that there's anybody at all coming back in droves except panicked, freaked out, short covering bears. And not even an idiot could be convinced that stocks at this level are some sort of value. Or offer value. So it's driven entirely by short covering, and on the other side of the trade are smart money players like Warren Buffett who know enough to back off their offers, while the short covering just kind of wafts stocks higher. So, I did read something interesting, the other day that the S&P 500 is really just 5 stocks. And that on a purely arithmetical basis, as long as Microsoft and Facebook, Amazon, Google, as long as they're not getting pounded, in order for the S&Ps to break down and crack 2100, they're currently at 2861. You would need the stocks other than those lunatic stocks that the institutional guys just essentially work, manipulate, engineer. The other stocks would have to collapse 45% to bring the S&Ps down to 2100. So I'm not quite buying that. Whenever you're in a situation where, we're in a bear market, there's going to be people saying all the way down, buy, sit tight, and this time it's different, and so on and so forth. So even though that it seems like a good argument that all the big boys have to do is support 5 stocks, and 2100, the low that we hit on March 23rd, will hold forever. But whatever the reason, and I'm having trouble imagining it, they're going to be wrong.
What kind of recovery are you expecting to see? That's an interesting question. Interesting only in that this is the first time we've ever had a recession where the public is not clueless. Like we hear the experts say, we should be out of this recession in 3 or 4 months or whatever. But this is the first time where we've had something going on in the economy that's so immediate that we don't need to listen to the experts. We can simply look at our own lives and say they're full of it when they talk about any kind of recovery at all. We've got cheerleaders like Larry Kudlow saying that 2021 is going to be spectacular, and Trump, of course, is on the same track too. I don't fault them for doing that. We need somebody to cheerlead, and it would be mighty depressing if we didn't have those guys saying what they're saying. But at the realistic level, or in reality, and as we can all see in our own lives, there's no recovery out there. Just play your own life forward. It's a question of when are you going back to a baseball park with 20,000 fans and, get hot dogs and beer? When are you going to go to a movie theater? Answer, never. When are you going to a crowded restaurant? Answer, never. When are you going to be standing with a crowd at a bar 3 deep? Never. So, and even at the institutional level, you see, like Disney, Disney's got a real problem. It's the biggest entertainment company in the world, but they're at least acknowledging in a realistic way that that their revenue problems are going to continue indefinitely because they've got theme parks that have to be completely reimagined just to open at all, and they've got the sports world that they telecast in so many ways. So in our own lives, we really have the same outlook as Disney. So I'm just not buying all this business about we're going to be going great guns by autumn. I think that's full of hokum. Sure. And of course, just with the return of sports. Some, like baseball, there isn't all that much contact between the players, but I can't think of any more contact than football.
Right.
And that's just to get a beer in the stands, right?
Yeah, those stands are a real problem. And you know, when we think of what goes on in the stands, that's just the American way. You're sitting in the middle of the row, and a hot dog vendor comes down the stairs, and he, you know, hot dog, and you pass your $5, $10 bill across the laps of 5 people, and the hot dog gets passed back to you. How does that even happen? So when you say that you've got to reimagine how all these things are done, I would say how they need to be done is almost beyond imagining. There's just and of course the concessions are a big part of what goes on in the stands. So it doesn't matter what business you're talking about right now, other than maybe Netflix and Amazon. You can see for yourself. There's no easy road back, and even if you get back, you're never going to get all the way back as far as doing business.
Well, perhaps people are going to have to start that old-fashioned thing we used to do and read. There's lots of books out there that haven't been read, and you can get them online. You don't have to go to the library or a bookstore. Because we're churning through all that online content is being churned through pretty quickly.
It's true. There's so much out there to read. You know, America started as a nation of readers as much as anything, and I think early on in the 1680s, or early 1700s, we had booksellers in Boston, for one, importing an enormous number of books from England, and the literacy rates that we had at that time, and this was, I guess you could say, well, it was Mayfair stock. They were intellectually upscale, but the literacy rate was something like 80% for men, 62% for women, and we were all readers, and it would be great to kind of get back to that, the tradition of reading.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, what is the nature of gold right now? Is it the place to be? Is it a safe haven? What's your definition and what you believe is going on with it?
Let me put a term out there for what's going on in gold. I would say that gold is not in a bull market so much as it is in a bullish market. So by that I mean it's in no great hurry to get to 2,000 an ounce or higher, but you can see that forces that would ordinarily be pressuring gold lower, such as the lunaticking in regular stocks when the stock market itself is marauding higher, gold tends to get forgotten or pushed down. But gold has been very capably holding its own in those situations, and it's really just 3 steps up, back, 3 steps up, and 2 5/8 steps back, and it's really been it's just difficult. But I think that someone asked me yesterday, I'm trying to get my subscribers into a vehicle called GDX that tracks the mining stocks. And it's such a nasty little bugger that you really can't take your eyes off it. You buy and you think, oh, here it is, it's finally taken off, but it doesn't. It goes for a couple days, and then it shakes you out so viciously that you're thinking, why do I even do this? But you take a step back, and I would say it doesn't matter where you buy GDX, currently trading $34. Eventually you make money, but it's just so painful. So gold is not in a bull market where we get these big moves and then just as steep declines, sell-offs, but they're quickly recovered. In this case, it's just a really tortuous trek higher. It's punctuated by these totally gratuitous sell-offs that occur in part because gold has relatively little institutional support. But it sure as heck has got grassroots support, and there's so much, there's enormous demand right now for physical bullion, gold and silver, and you sense that at some point it's going to break loose from the paper bullion moorings that are constraining gold right now.
Will gold become more important as people struggle with debts? We have governments, of course, that are pumping out billions, trillions in some cases, to try to keep the economy afloat. When is this debt bubble going to hit us, and would gold protect you from it?
Well, let's hope that gold doesn't have a role to play right away, because when you talk about, when you involve gold in your money system, nothing could be more powerfully deflationary. We're talking about getting back to honest money, and nobody even believes we could pay back what we owe with honest money. The only way that we can pay debts that have reached the point of absurdity, both public and private, is by inflating our way out of it. Or there's the deflationary course, which means liquidating our way out of it, where everybody simply goes bankrupt. And I think the bankruptcy thing is really the stronger force right now, and that we'll have to go through a period of liquidations to discharge that debt before we get to what at this point may be an inevitable hyperinflation. And I haven't used that word in more than 30 years other than to challenge it, but I'm afraid we're amassing debt that will have to be dealt with in a hyperinflationary way ultimately, because it's government piling up the debt. But first, we're going to have, in the private sector and in our personal lives, we're going to have just bankruptcies that equate to a catastrophic debt deflation. So nobody's going to be much talking about gold other than gold bugs who think it's a great hedge against the unknown, all the uncertainties. And that's true. It's true. I don't think you can go wrong really by accumulating gold in any shape or form right now. But to implicate gold in a money system is to pose this the solution of paying our debts in honest money, and that's just not going to happen.
When you said hyperinflationary, we're talking here in Canada already of things like $10 cauliflower, $12 cucumbers, because there aren't the migrant farm workers to help out the farmers, and the city kids just don't want to help.
Yeah, but that's still, everybody keeps imagining inflation in the 1970s version, which is driven by a wage spiral in part. No one believes that we're going to be having a wage spiral. We can see isolated places such as agriculture where the labor needs are kind of specialized. So I would say that inflation in the lettuce bin is somewhat it's not necessarily unique, but it's certainly let's say particularized, and but I don't see it as inflation extending out into the entire economy in a way that pushes wages higher and this and that. One of the big problems, I think a lot of people are reading the stimulus as inflationary, but again, in your own life, you can see how wrong that is, because when that $1,200 check or whatever it is hit the accounts of people who were eligible for it, it instantly went dead. I mean, it's like nobody's out there buying bass boats and Cadillac Escalades. The money is simply sitting in the accounts, so it's having no stimulus effect at all. And the longer it sits, the more it becomes deflationary dead weight. or it gets kind of sucked into the maw of deflation, meaning you've got the $1,200 and you're thinking, I'm not going to spend it. I'm just going to keep it for a rainy day. What a rainy day is next month's rent. So what the stimulus is going to do will be to keep your landlord solvent for an extra month or two. But if that's stimulus, then I'm a monkey's uncle.
Well, in Canada, they have a different system, $2,000 a month for people apply for it, and that'll be in for 4 months. So maybe that's a little more help. And they're also saying for a lot of people, that's a lot more than they were getting, from minimum wage if they were working in retail, and they may not want to go back to work if the retail stores open up. Is there going to be some kind of a labor shortage because of it?
The labor shortage is kind of we'll see shortages in some areas because there are parts of the economy that are functioning. Google, for one, is trying to hire a ton of employees to keep its warehouses running. But those situations are few and far between. So I don't see much in the way of labor shortages developing. There's plenty of that out there.
Is oil going to make any kind of a comeback soon, considering that I think just about all the storage space around the planet has been filled up?
No. And even before the pandemic, we've talked before about how you can't push prices up by limiting supply. I mean, you can only push them up so much, but in the face of hugely falling demand, you could virtually throttle oil and we'd live off inventory for a while and there'd still be no price increases. So oil is dead.
And again, as you were saying, once people get used to working from home and businesses realize they don't have to pay all that money for giant office towers, the commuters on the freeway are going to drop. Right.
Good for air quality, I guess, but, anywhere you look, really, there's a dramatic falling off of business that's, sitting out ahead over and above what we've seen so far, which is 30 million unemployed. So in the U.S. So, we've got an insufficiency of demand, and some of the better guys out there who make the deflationary case, they're focusing on money velocity, which is at the level of the individual. This is the idea that I've got this money, and it doesn't matter where I put it, it's going to make me money. And so the stock market thrives, retail thrives, everything thrives. We're on the waning end of money velocity right now. We're on the waning slope, and so that's again one reason why stimulus is going to make no difference at all.
People who work at home have told me they've never saved more money in their lives because they're not driving, they're not paying for parking, they're not buying lunches, they're just at home in their sweatpants.
Yeah, and that's true for me. I mean, I'm not going out to restaurants. I notice that I'm only filling the gas tank in my car every 3 weeks instead of once every 5 days. And I wish there were more places to spend money, but when things get open, I'm not going to be going to concerts and I'm not going to be going to baseball games. I don't know what I'm going to be doing, but yes, I'll be spending a lot less, and I'm sure that corresponds to the plans, the outlook for pretty much everybody.
Rick, thank you so much for chatting with us.
Always a pleasure, and I appreciate your inviting me on, Jim, to connect with your audience.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.